Okay, folks, welcome to Sunday Night Stock Charts Live. This is Bob Desmond, and happy Easter to everyone. And what we're going to be talking about tonight is the PCE data that came out on Friday. They announced it on Friday. The markets were obviously closed, and we're looking to see what the reaction is by the market to the inflation data. It is the Federal Reserve's favorite measure of inflation. We'll talk about it. We'll talk about uh, Japan. Uh, and some questions are being answered about the whys behind the strength of the US dollar. And look no further than Japan. So let's get to it. Let's talk about the opening futures action here. I'm going to apologize in advance. I'm kind of sick today. I've been coming down with something. I've slept half the day, and I'm probably going to stay strictly to the 7 o'clock hour and crash and go to bed. So let's get to it. Let me share my screen. Okay. So let's say hello to folks. Jeffrey, happy Easter, my friend. RB, happy Easter. Can you please cover Amazon? Sure. The chart looks like one wants to break out higher. Okay. Yeah. So good point that we have a new quarter, new month. So there's going to be a lot of volatility these first few days of the quarter. Now, looking at the E-minis, thank you, Jeff. Appreciate that, my friend. Happy Easter to you, too. Looking at the E-minis, we are up at current spot to 1%. So no immediate knee-jerk reaction negative to the PCE data. The headline read came in one tick below expectations, but inflation's still out there. Anybody that's going to tell you that inflation is a thing of the past, they're completely wrong. So don't buy into it. So E-minis moving up higher at the open. We'll see whether or not they can hold these gains or do they reverse. Let's check in with NQ. This is the NASDAQ 100. NASDAQ 100 bettering the E-minis. They're up by over a third of a percent. Now, in orange here, you have your third standard deviation Bollinger Band. So this is probably going to sell off pretty soon. It doesn't mean it's going to crash or anything like that, but this is going to pull back soon, probably before we log off tonight. So expect a bit of a retrace here very, very soon. Looking at the Russell 2000, big move up higher here by over a half percentage point. We were higher. We've given some back. Again, it's gapped up versus the third standard deviation Bollinger Band. Very powerful move here. And take a look at your moving averages. They're all stacking up nicely to provide a floor like you had back here late last week. Checking in with the Dow. The Dow was on a tear. It gave back a bit. We are up at current spot to 1%. So there's definitely money being put to work here this evening in the futures market. So the whisper number on the street regarding PCE must not have been as bad as what was expected. Therefore, equities are moving up higher. We're going to check in with the CME Fed Watch tool in a moment, and we'll see how the market participants are pricing in a potential ease in June and July. Denny, welcome, my friend. Thank you very much. Appreciate that. I think it's every spring I get this little cough that builds, congestion. I just get really tired. So It'll be a few day thing, but thank you. All right, let's check in with the dollar. The dollar had a major breakout last week. Actually, the week before last week was the retest. And at the opening here, a bit of a sell off. But this is a 4-hour chart. It's holding the 21 period moving average for now. I think we're going to be setting up for a probable continuation breakout here on the dollar, given the weekly price action of the dollar. So I have to say that I've been very impressed with the strength of commodities in the face of a rallying U.S. dollar. The question is, how long does that last? It's not sustainable. So let's check in with the euro. Euro rising. Wow. Nice outside reversal bar here. Bullish engulfing. Doesn't matter what you call it. One of my top 5 favorite candlestick patterns. Link below to my 5-part video tutorial. It's free. So a good move up higher on the euro. Let's take a step back here and take a look at the 30-minute chart. And what you see setting up here is really a pretty setup, at least on an intraday view, where you have a potential higher low. And that current, we have a breakout off of that higher low. The question is, do we hold it? Can we capitalize on this? So very good price action here on the euro as we proceed into the new trading week. Back to the 5-minute chart. Let's check in with the yen. Yen rallying here. Now, the yen is very important. I freely admit, because I have what was it? OCD. Most traders have it. OCD. I need to understand what's happening in the market. And if I can't understand it, if I can't, I'm like Rain Man. I start hitting my head, going crazy. In my case, in reality, I just go quiet until I figure it out. So I go into my cerebral moments, and finally, it started to click what was going on with the dollar, why it was so strong. And the reason was that the Bank of Japan, they raised rates for the first time in like 20 years, some ridiculous amount of time. And the yen dropped like a rock. Why? And the dollar went like this. So why did that happen? And then finally last week, I was talking to members and I had my aha moment. I figured it out. And we're going to talk about it a little bit more later on when I'm going to play a video for you, because a guy that's out there far smarter than me, he gives us a pretty good rationale for why the Japanese yen is kind of important for the U.S. stock market right now. And that's why I titled this commentary, this live stream, Can Japan Take Down the U.S. Stock Market? And it's quite possible. And I'll go over the reasons in a moment. So Japanese yen looking pretty good here at the open. Let's take a step back like we did with the euro, see if we have a setup. You don't have a setup until you get a higher low. For all I know, this is just a knee-jerk reaction. This is a beautiful setup. So what I'm looking at here on the yen, we don't have a breakout yet, but I want to know if and when we break out, because we have our higher low. What happened here? Here you have it. We are back above support. We drifted below it after hours on Friday, but now we're moving up. Correction, Thursday, we drifted below after hours support. moving on now, because now we have a good feel for what the forex markets are thinking. What are they doing? So looking at this chart or these charts, I would suspect that the commodities complex is rallying. In particular, gold stocks. Gold left out that we kind of overbought. That doesn't mean it can't go further up higher, especially with a dollar that is pulling back at current, and you're seeing yen rally, euro rally. So let's check in with spot gold, which has been on a tear. And we'll go to silver. We bought more silver last week. Whoa, look at this. We are up over a percentage point on gold. That is the power of a declining US dollar. So really, really awesome stuff here in gold. Very nice. I will warn that, again, 30-minute chart, we're trading up above the third standard deviation Bollinger Band. This is not your out-of-the-box 2 standard deviation Bollinger Band where you can keep hugging that upper line of the Bollinger Band. A 3 standard deviation, it's a little bit rougher to do. You're really not supposed to be there. Expect a retracement here. I would not go buying right here, right now if you're looking to buy in your futures account. Wait for the pullback. You're going to get a retracement. Let's check in with silver. Silver up over a percentage point. This has more to go. Silver is setting up beautifully. There's nothing I don't like about silver. Relative to gold, it's probably at its cheapest price in 40, 50 years. So loving the story on silver. It's got some catch up to do. Love the silver stocks. So we added more silver last week. We're probably going to be adding more on a breakout. Not much more, but we'll add more. Let's check in with energy. Energy is looking really, really good. And that's a good thing and it's a bad thing, right? Your energy stocks are getting ready for major, major breakouts here. Oil, unfortunately, is getting ready for a major breakout. We'll go over the chart of that in a moment. Gasoline prices, one of the best investments you could make so far in 2024. That's not a good thing. That's a very bad thing. So let's check in with nat gas. Nat gas, very volatile, down over 0.75%. We had covered calls that expired on Thursday. Technically, I guess Friday, but Thursday was the final day of trade. And we're going to look to resell those calls on BOIL. BOIL is the leveraged ETF product. And we'll look to trade more, generate more cash flow on BOIL. Okay. Taking a look at West Texas Intermediate crude. Yeah, so this is a problem. We're moving up higher again. And to bring this chart home, here's a 4-hour view, very strong, very powerful chart. This has got more room to run. Here's the weekly view. You know, this is a major, major breakout here on oil. And I've been warning about $85 the barrel on oil. I think the markets can absorb rising oil up until $85 a barrel. You have the Federal Reserve, federal government now restocking the Strategic Petroleum Reserve, now at $81 a barrel. That was their last purchase. Now they're going to have to pay up more. So now you have the federal government, which manipulated the oil markets a year ago. They're now going into the markets bidding up oil because now they need to refill the SPR. So thank you, federal government, again, for shooting us in the foot. Checking in with RBOB gasoline prices. Moving up yet again. Spot 1.7%. This is going up higher. This is a bull flag setup. Only a 5-minute chart. Let's pull back. We're not day traders here. 4-hour view, threatening a breakout. This is going to be a problem for the equity markets because remember, Federal Reserve is expected to ease in June, July, September. I don't know how they do it. I don't know how you report a GDP. They had revised GDP up last week to what, 3.4%? So you have 3.4% GDP growth. You also have the energy complex breaking out. You have not natural gas. I shouldn't say that. Natural gas is not breaking out yet anyway. Oil breaking out, gasoline breaking out. Home heating oil is not breaking out. That's a good thing because I need to use that. Let's check in with home heating oil. And watch this. It's going to be up now. I'm going to have to get a refill quickly. I think this is a seasonally weak period of time for home heating oil anyway. We're coming into what is the symbol for heating oil? I rarely look at it. I'm not going to waste too much time here. I'm really not that curious. We'll try this. HE, I want to say HE. No, that's hogs. Forget it. Here, this is my OCD taking over. Forget it. You just had it up. I literally had this up only a few minutes ago. Okay, forget it. Moving on. We did oil. Let's check out agriculture. Whoa, big move up higher today on corn. Wow, that's a rip your face off move. This is a 4-hour chart. Let's go to the weekly view. Corn getting ready to break out here. It's going to have resistance at its 21 period EMA. Soybeans, these are all weekly charts now. Soybeans were down last week, struggling to get above that 21 EMA. Bull flagging out here. Wheat. I mentioned last Sunday, I thought wheat was a buy. It was up last week. It's starting to move up yet again. Wheat looking good here. Let's check in with palladium. That's basing nicely. What else do we want to take a look at? Commodities right now have me fascinated, especially now with the dollar showing a little bit of weakness. You're going to see some really serious moves in the commodity complex. And if you see big, serious moves, big gap up higher in the commodity complex, you got to keep an eye on the CME Fed Watch tool because that's going to tell you what market participants are betting on. They're going to tell you, hey, listen, these you have GDP at 3.4% by the government's own numbers, and you have energy prices ripping through the ceiling, food prices now beginning to move up higher. What are you talking about? Cutting rates here? It's nuts. You're supposed to be raising rates. Not that I wanted to raise rates, but I can make a better argument for raising rates than I can for cutting them. Okay, let's go to comments. Michael, welcome, pal. Mr. Pete, welcome. Maybe. I think they're walking a very, very fine line. one cut's not going to do anything. It's going to take 6 months to work its way through the system. That one cut could start to sell off in the equity market because history has shown that first rate cut usually marks a peak in the equity markets. We covered wheat. Wheat looks bullish. Beginning of at least a consolidation. Thank you, Dean. Let's see if that works. I don't think that's it, but we'll try the other one as well. Nope, that's not it. No, not for the futures market. Those may be ETFs, perhaps. Okay, what else do we have here? Volatility down. Let's check in with yields. Yields are down. NQ off of its highs, but it looks pretty sound. Okay, let's that happened to my. Sorry, folks. It looks as though all of my. I got to stop sharing for a moment. I'm not quite sure what happened to all of my. Oh boy. Oh, here we go. I found it. Okay, let me start resharing again. I thought I lost all of my screens I wanted to go over. Okay. All right. So coming up this week in terms of economic data, before I forget this, let me bring up the CME Fed Watch tool. Okay. We got a lot of economic data coming out this week. We got S&P Manufacturing PMI. That's a revision. Construction spending, ISM Manufacturing. That's been in contraction for well over a year now. Any read below 50 is a sign of contraction. Any read above 50 is a sign of expansion. Now, believe it or not, if that read comes out on ISM Manufacturing, if that comes out above 50 and goes into expansion, the probability of a rate cut goes down. So the markets, bad news is good news is bad news for the equity markets, as sick and perverse as it is. So the markets may not like the fact that ISM Manufacturing is going back into expansion. If that happens. Tuesday, factory orders, big number, very, very important. We get a lot of Fed heads coming out after that. Job openings. Oh, it's jobs week. We get ADP coming out on Wednesday. ISM services coming out also on Wednesday. That's a 10 a.m. number. So you may want to set a reminder on your phone that you have a economic data coming out at 10 a.m. because that you could open up strong or open up down, and then by 10 a.m. you get that number, and all of a sudden you don't know what hit you. You forgot about that 10 a.m. report because you're going about your day. At 12 noon, on or about 12:10, you have Jay Powell out. He had an interview on Friday. He was sounding pretty hawkish, so I'm kind of surprised with the strength of the open here. Probably just more money going back into the market, new month, new quarter. Thursday, initial jobless claims. We get that each week. Again, lots of Fed heads coming out this week. And their purpose of coming out is to control the narrative. So it'll be interesting to see how they're trying to move the markets with their narrative this week. Friday, we get non-farm payrolls. I like to call it the Pimp Mac Daddy of all economic data. Expectations of 200,000 job increase. Usually they come out with a ridiculous beat, and then they revise it down the next month. So we'll see what happens. Average hourly wages, keep an eye on this, and hourly wages year over year as well, because if this expands, there's nothing the Federal Reserve hates more than seeing people make more money. So they view that as inflationary. They won't ever go to the federal government saying, hey, guys, you're causing inflation. You guys are causing inflation, not the people. You guys are causing it. So that's not going to happen. So they'll be more than happy to tax the worker and punish them. So U.S. hourly wages, keep an eye on that. Very important number. And that is the week to come. Going into the new trading week, we have Schiller PE ratio at 35.14. Pretty expensive. Probabilities of a Fed ease for June. Now only 66.9% probability of an ease. This is well over 80, 90, not too long ago. July, back up above 80. This was down in the 70s yesterday. So let's talk a little bit about Japan here a bit. So we already went over it. The Japanese, a little bit of background, Japanese central bank, BOJ, for the first time in like 20 years, fact check me on me, it really doesn't matter. It's a long goddamn time since they raised rates. And they also stopped yield curve control. They've been manipulating the bond market for years. How can they do that? Well, they own the bond market. They buy their own debt. They own a lot of the stock market. That's how bad it is over there. So I'm going to play this for you. This is Michael Gayed. I've seen his work before. He's actually pretty good. So let me play this. Let me make sure I'm sharing my audio. Get out in front of it first. I am now sharing my audio. Okay, let's do this.
Because otherwise, you will really have a very serious inflation problem in Japan. And they're way behind on this, which means that there's a scenario where the Bank of Japan could panic and hike rates in ways that we've never could possibly imagine. That causes a massive squeeze on the yen. Yen appreciates. It creates a repatriation of that cheap leverage back into Japan, causes that carry trade to reverse, which means all the borrowed yen that's gone into tech stocks. And yes, folks, there is a lot of borrowed money from Japan that has gone into AI stocks, U.S. markets. That suddenly creates a margin call. Right? That creates the vol spike. That has always been my thesis. I always thought that was sort of the thing at the periphery that nobody's talking about and thinking about that is always at the highest risk. And it's hard for people to understand that because it's like, why would Japan matter? Because otherwise you will really have a very serious...
Okay, so basically what he's saying is that Japan has had such cheap money, negative interest rates for 20 odd years now, that they've been able to borrow very, very cheap, meaning traders, and they've taken that money, and what have they done? They borrowed cheap and they invested in U.S. tech stocks, and they're making a killing on the spread. But now we're seeing Japan see a lot of inflation. So that's why they had to raise rates and stop yield curve control about 2 weeks ago. The problem is it wasn't enough. I was wondering what the heck is going on here. Japanese yen dropped like a rock on a yield on a rate hike. Yet basically what the market was saying, hey, you're way behind here. You got to be a lot more aggressive and raise rates. So they had a special meeting. I think it was on Thursday. The BOJ and Lord knows what other central bankers were involved there. And they closed up. Yen closed up on the week. So apparently they've come to an agreement where they're probably going to be a lot more aggressive with tightening over there. But what does that mean for equities here in the United States? Well, if you have interest rates rise on the borrowed money, the margin money over in Japan, you have U.S. tech stocks that are sporting massive multiples. So your cost of borrowing is going up, and tech stocks are at a premium. So what do? You begin to repatriate, make those profits real, bring that money home. So you're taking out another leg out of the stool under the equity market. Is it enough to take down the entire stock market? I don't know. I'm not that smart. But it's certainly going to be a factor in the rate of change in the market, meaning the ability of the stocks to move up higher, in particular AI stocks, et cetera, because you're losing a potential big buyer of those stocks, and they may need to cover those positions because of margin debt. So this is a serious problem. So here's the yen. We already spoke about this. I'm not going to spend too much time here. Yen closed down on Thursday, but managed to close up on the week. An inside week, no new high, no new low, and now we're seeing the follow through to the upside on the Japanese yen. So something happened over in Japan during that meeting, and the bond market is now confident, the Forex market is now confident that you're probably going to get more rate hikes. That is not U.S. stock market bullish. Long story short. This is just, I happen to be on Twitter earlier today, and we've been talking about for several weeks now about how gasoline was breaking out, how oil was breaking out. And really, nobody's been talking about it in Twitter sphere until really today. And you're seeing a lot of chatter about how gasoline prices are breaking out. Higher energy prices will probably end the disinflation that has led to Fed rate cut expectations. This is Berman, respected guy, and so true. I'm completely in. How do you make that you're going to keep rates as low as they are right now on a historical basis, and even cut rates when you have gasoline prices, which they just conveniently back out of the headline number? They look at the core number, ex food and energy, but still, you have in your manufactured products. If you make, I use the analogy of tires. Okay, if you're a tire manufacturer, your price increases are included in the core number. But what goes into making tires? It's not just rubber, it's oil, petroleum products. So if oil prices are going up higher, you're going to see them manifest themselves in the core number, even though they back it out. The headline, West Texas Intermediate crude number, but the distillates still work their way into manufacturing costs. Prices go up. So this is a major problem. Also, you need to transport this stuff. Diesel prices moving up higher. So what happens there? Your price of manufacturing goes up as well. This all goes into the core number. You cannot ignore energy. It's very, very important. Here's crude futures. This is off a TrendSpider. They're pointing out what we've been talking about for a while here, or getting ready for a breakout, I should say. But clearly, a well-established uptrend, and it appears as though we are getting ready for a big move up higher. And if the dollar, which oil is currently priced in, continues to weaken, I'm not calling for that just yet. Last week, weekly chart was very, very strong on the dollar. If it does weaken and fails to hold the breakout point, well, then you're going to see crude prices go like this. Moving on to, I want for alternative energies to do well. I really do. But, the reality is, and I think that the Europeans are slowly waking up to this. Even the Germans, I think they're talking about allowing nuclear power. But Sweden's largest wind farm is facing bankruptcy. 179 wind turbines, and has in the last 3 years accumulated a loss of 2.5 billion kroner, or 220 million in euro. Its debts now amount to, I don't know what SEK is, 6 billion, 530 kroners, 530 million in euros. So going bankrupt. Now, you're seeing selling prices of EVs drop like a rock. Nobody wants these cars. They can't give away Ford Mustangs anymore. I remember when the Ford Mustang, when it went EV, they were getting a premium on that car, well over MSRP. That was about 2-3 years ago. Now they're selling them for less than MSRP, like 30% less. Nobody wants these cars. So Powell keeps interest rates high, potentially even hiking them should inflation not retreat. This is what we've been talking about. We've been talking about this for weeks now. This is why I go over this every single night with members on Market Wrap. Every single live stream, we look at this and we point out that, you know what, back in January, there was like 100% probability of an ease for March. But that never happened. May was a foregone conclusion, no doubt about it. We were going to get a rate cut. That may not happen now. June is still good, if not may not. It's not going to happen now. I'm sorry. June is still on the table. July is definitely still on the table. So back to this. Powell keeps interest rates high, potentially even hiking them should inflation not retreat, thereby strangling the economy and precipitating a sharp downturn. Yeah. Because what's going to happen? You know, you have the federal government just passed in the wee hours of not this Saturday, prior Saturday, a $1.2 trillion spending bill. It goes into the ether. It's waste. And they're never going to stop. So what does that mean for our borrowing costs? Our borrowing costs as a nation are now at $1.2 trillion per year. That's well in excess of the military budget. Where are they going to get that money from? Well, either A, they're going to have to raise taxes. And the economy here just goes south because people are already broke. Two, they borrow it. And what does that do for yields? It goes up higher. What does that do for borrowing costs on that debt? It goes up higher. So they're smothering our economy. It kind of feels intentional. I mean, nobody can be this stupid. Nobody can be this stupid. As markets plummet significantly, the Fed, initially sluggish, will finally spring into action. That's what they usually do. This response comes after a dramatic market descent. They'll implement a massive emergency rate cut at least 400 basis points. So here's the projection. And this is just speculation. So, you know, this is certainly not fact. But here's the projected downtrend and the reaction. This is why the initial cut by the Federal Reserve usually leads to a market sell-off. Why? Why does that happen when it seems so counterintuitive? The reason why it happens is because they're responding to something. They damage the economy again. Now they got to come in and try to fix it, but they're really not fixing it. They're putting Band-Aids on it. It's a structural issue. So that's why the equity markets sell off. Whatever they do the first round, 50 basis points, a whole basis point, it's going to take 6 months to work its way through the economy, A. B, the markets are still going to say it's not enough. You got to go back down to zero. So as you proceed into, you knew you weren't going to get away with this, not seeing this. As you proceed into the new trading month and quarter, here's your yield curve, folks. We spoke about this on Thursday night. And frankly, I said back then, you know, Thursday night. Was it Thursday night or Sunday night? I forget. I said one trading day or a couple of days left to go in the week and that this might change. It was more bullish when I spoke last, but still, this is a very, very bullish setup for the yield curve. For those not familiar, if you're bullish on the equity markets, the last thing you want to see is this breakout back in October when this bull market began. The end of October when rallying, because remember, during this rally, we had 4 back-to-back up months on the yield curve. It broke out of a downtrend. What were equities doing? They were declining. We were in a bear market. What happened, I think it was October the 23rd of 2023, that's when the curve pooped out, it stopped going up, and equities began to rally. So what has the yield curve been doing since then? Consolidating and putting in higher. If we begin to break out on the yield curve, we're going to heavily short this market. I mean, in a very, very big way. Looking at multiples, I'm kind of out of sequence here. The multiples on these equities, and I forget who it was that wanted me to go over Amazon. Amazon's sporting a 62 handle on its P ratio. The only thing cheap here are the energy stocks. Exxon, Chevron, Conoco. Those names are still relatively inexpensive. Look at the healthcare space. Lilly sporting 136 multiple. Who'd have thought that? Merck. Can this be right? 998 multiple? I mean, stocks are very, very expensive. Even Visa and MasterCard, they're sporting a multiple of, on average, about 35. So very, very expensive, this market. I just sounded like Yoda. I'm looking for, do they have mining stocks here? I'm not seeing them. Healthcare, communication, they have mining stocks on here. I'd like to see that. Okay, moving on. So just a reminder, and a lot of people think that, and we covered this on a live stream about 6 months ago, that the financial crisis happened like a one shot. And it's true, the equity markets broke hard pretty quickly, but it took a lot of straws on the camel's back to make that occur. And we knew the problem was out there. We knew that there were zero interest loans, no doc mortgages were being issued. They were all going to reset. The handwriting was on the wall that we're going to have a crisis, but and nobody refused to accept the fact that you can have a crisis in residential home markets. But it happened big. So it began with BNP Paribas, and I actually forgot about that. I always say it started with, actually, no, I'm right. I am right. Bear Stearns was first, then you had BNP, that's a European bank. Then they started cutting rates, right? Here, they cut rates by 0.75 of a basis point in the April quarter, and stocks didn't do anything for the markets. They cut by a basis point. That wasn't enough. The markets sold off on it. And this is what we always talk about. That initial cut is not enough. It never is. They need more. So you got 0.75 of a basis point cut. So that's a full basis point that they've cut now within a few months. Equities rallied, and it was a head fake breakout. Then you had more bankruptcies following through. Merrill Lynch, AIG, and then we went into capitulation. So if we need to remember what happened this time last year, you had the regional banks that were in a lot of trouble. And if the Federal Reserve is not able to cut rates and throw them a lifeline, because remember, they're loaded up to the gills with low interest rate mortgages, T-bills they were forced to buy. They didn't structure them properly. So now the Federal Reserve has had them on life support for a year. It's not as if they're all fixed. They're not fixed. And that facility that they were helping the banks out with, that's expired. So the regional banks, which rallied last week very nicely, that could be a head fake breakout, especially if the probability of a rate cut in June decreases measurably. So this all took about a year and a half. We're about a year into this now. So it's not over. And when we're talking about Japan potentially being a buyer that is not as aggressive as it has been, and the rationale, if you're a Japanese trader, do I borrow at a higher yield and buy tech stocks in the United States with read this off. S&P 500 PE ratio has moved up to 24.4. Forward looking. We already went over the trailing, which is a 35.14, which is 32% higher than the median PE ratio going back to 1988. So if I'm a Japanese trader, do I borrow more money or do I continue to pay higher yields on my margin debt, or do I book profits over the United States? Something to think about. Okay, let's do some chart requests. BAPE negative 52. Does that mean? Yeah, they're losing. Yeah, they don't have earnings. Yeah, they're losing money. Coal, natural gas, base loaded energy 24/7. Yeah, and they're horrible for the environment. Horrible. GTN has 17 insiders bought over $8. What's GTN? Check out. We'll bring that one up first. GTN. Hey, folks, we have about 75 people on right now. If I could ask you to like, subscribe, it helps me out YouTube algorithm. I'd really appreciate it. Thank you very much. All right, GTN. Folks, we're using TrendSpider Automated Technical Analysis. 35% discount code at a bare minimum. Use that link below. And it's Easter, so they probably give you a better discount. Just use the link below and get on over there. I do have a partnership with them. Monthly chart GTN. We have insider buying, Gray Television. Never heard of them. We are definitely monthly chart at the lower end of a base here. You have fractal support down at around $3.75. That would be about a 40% haircut from here. We do have support immediately below at 523. I would use that as my stop loss point. So the monthly chart is looking good. We had some good up volume last month. Let's check in with a weekly view. Weekly view, you had a breakout last week above fractal resistance on volume. So this stock is looking pretty good. You're probably going to get a retrace back down to that $6 per share mark. I'd be a buyer at that level. Daily chart. Really nice stuff here. I think that it's in need of a retracement on a weekly view down to that $6. It could be $6.02. It doesn't have to be exactly $6. But on any retracement here, I would step in and I would be a buyer of the shares, looking pretty good. Duolingo. I used my Duolingo this evening. I had coffee. My daughter speaks fluent Italian. And so I impressed her by saying, I made coffee. I said, caffè con latte, per favore. So I impressed her. But I learned that from Duolingo. I love Duolingo. All right, so let's talk about the chart. Monthly view, we're a little bit tired here. We put in a new monthly higher high last month, but we couldn't hold it. Weekly view, it's consolidating. Volume was light last week, but it was an abbreviated week. You do have resistance right up here at this volume shelf, 223.33. I wouldn't be a buyer of the shares aggressively until we closed above that mark. I'd be okay with buying right now. But if we begin to break down below this lower band of support, let's call it what was the low of last week, 215.68. You know, I would keep that stop tighter. If we break down to new weekly lower lows, I would probably avoid this, but I'd be a buyer above 223.33 daily chart. Yeah, there's that 223.33 again. I like that price point. I'd be a buyer at that level. You want to nibble here? Fine. Scratch the itch. Tight stop loss. Remember, monthly chart, we've stopped going up. We were down last month. Weekly chart, consolidating. So the monthly chart doesn't mean sell. It just means, hey, you know what? We may be due for a pullback here. I mean, the stock has been on a tear. Amazon. Amazon monthly view. So, you know, I like Amazon, and it's been one of our best stock charts for the past couple of weeks. We've been bullish on it. I have not traded it. I've been more involved with SMCI, but there's probably more fuel left in this stock. We had a good close on the month last month. The one thing about Amazon is that it's been somewhat of a laggard relative to the rest of the market. And that could be a good thing in a way, in that it's got to play catch up with the rest of the market. You're going to have resistance up at around 187 per share. We closed out at 180.38. You have resistance right at 180 as well. Actually, that's now support. Now support. Daily chart. Bearish reversal bar on Thursday. Here's VWAP at around 177 per share. If you can get a retracement back down to VWAP, which is rising, so it's not going to be 177, obviously. It'll be higher than that. I would buy the shares. You have some support that's been building here at around 178. I think 178 is the right number because a lot of traders use that VWAP and they'll step in and help bid up the shares. I'd be looking at 178 as an entry point on Amazon. Me personally, I'd probably look to sell puts here. Let's check out the premium. IV rank of 40%. That's pretty respectable if you want to sell puts. And I would sell a put spread and get long of Amazon through a derivative trade, or just wait for that 178 mark and buy the common stock, perhaps sell covered calls up at around that resistance level that we spoke about at around 187, I think it was. We're always looking about generating cash flow. What else do we have? I'm going to go to the members area. Riot blockchain. Monthly view. We're still consolidated. They really haven't benefited at all from this rally in Bitcoin. Very strange. Weekly view. Under a lot of pressure here. I'm not loving this. We do have a higher low on a daily chart. We have broken out. You can call this a retest. I think it's a little bit speculative, given the fact that the higher time frames, weekly and monthly view, not wonderful. We are at the lower end of a trading range. I'd be okay with putting on a trade here, but I would really need to see some follow through to the upside on these shares before I got aggressive with them. I'm sure there's pretty good short interest in the name. Let's take a quick look at BA. Boeing. What's our premium here? IV rank on Boeing. 55% IV percentile, looking pretty good. So another candidate here where you could sell premium. In this case here, the share's been pretty beaten up, so I'd be good with selling some out of the money puts. And even you have so much overhead supply above, I'd be okay with putting on a call spread as well. You could call it an iron condor or a synthetic strangle. Keep those wings really, really wide. So Boeing is looking like a good trade here from an options perspective, not from, and when I say options perspective, I'm talking about selling the options, not buying them. Selling the options. Be the banker, not the borrower. Your probabilities of profit are a lot greater. Now, I'm going to draw my trend lines here. Yeah, we bounced right off of support. That's a monthly view, weekly view. This could be just a retrace back up to a breakdown point. I don't trust this. I would not be a buyer of these shares right now. This is a daily chart. It looks okay. You have a higher low here, but you got to defer to the weekly chart, which has broken down below support. This is a touchback, call it a retest, call it cupcakes. It doesn't matter. What the market is doing right now, what traders are doing right now is that they think that we've hit support, which we have, and the bottom is in. And maybe they're right. Do I want to be a buyer into resistance with this company? No, no way. Long-term investment, you want to put on a position, fine. But I would make it a small one because the path of least resistance still remains to the downside for Boeing. Does Bitcoin flag look obvious that is going higher? So Bitcoin, we need to keep in mind is that, a lot of people are trying to compare it to gold. It's not gold. It is not a risk-off asset. It's a risk-on asset, and it will correct in all probability. Maybe this time it'll be different because now it's more widely accepted. You have ETFs that are out there. But are you talking about on a daily or weekly time frame, Trader Isaac? That bull flag setup? This is going up higher. This wants to go up. We're right there. You have a Bollinger Band squeeze forming on Bitcoin. You have the Bollinger Bands in black inside the Keltner channels consolidating. This is going to be a breakout in all probability to the upside. No guarantees of which direction the Bollinger Band squeeze is going to take, but given the direction of the trend, which is clearly up, I think that this gets resolved to the upside, and it's going to be a ruthless breakout on Bitcoin. So I had a price target going back about 6 months ago of 80,000 on Bitcoin. I think we're going there in a heartbeat. So I remain bullish on Bitcoin. Bitto? Well, isn't that the same as that's the ETF, isn't it? Wow, no. Just what is this? Bitcoin strategy ETF? I'd rather buy the Bitcoin rather than this. It's not correlated as much as it looks with Bitcoin. It's correlated, but this is a much better chart than this. This is a little bit sloppy. It is correlated. I'd rather buy Bitcoin. Here, let me just go do this. Bitto. We'll bring the correlation above. Yeah, very tightly correlated. So I guess if Bitcoin's going to break out, Bitto's going to follow along with it. So I guess that by de facto makes me bullish on Bitto, but I like the chart of Bitcoin better. They should look a lot more similar than what they actually are. This is a very, very tight consolidation. So, folks, thanks for being here. And everybody have a really awesome Easter. Thanks for being here. Like, subscribe. You know the deal. Everybody have a profitable trading week, and I will talk to you soon. Have a great evening. Be well.